Alright, Event Trader here. Good afternoon to everybody. Obviously, it's been a pretty slow day out there, as is typical for an options expiration day. Seen a little bit of buying going into the close, not a lot of fear out there ahead of the weekend. I haven't really seen a ton of rhyme or reason behind any of the moves, just that slow grinding pattern higher, but volume's extremely low, so not getting caught up. And we talked a lot about how I don't want to read too much into an options expiration day, just because there's different nuances at work that makes it a little bit more difficult to read things. So just watching this action play out, not really planning on taking too much home with me in terms of new ideas in the markets, but I want to take a look at the week ahead at some of the key items coming up and highlight that, and to discuss a little what we need to be on the lookout for. Obviously, the G20 meeting, which kicks off Friday, is going to be key. I'm expecting a pretty busy week in terms of rumors and stories on that. A lot of he said, she said, what to expect. There is a call. We're going to discuss this with Carmine, expected on Tuesday ahead of it, between Lighthizer and Mnuchin and their Chinese counterpart over there, Liu He, and that's expected to kind of set the table. But there's going to be a lot of speculation around that. There's probably stories like, I already guarantee that the New York Times and Washington Post will be negative, Fox will be positive, and that's how it goes. So try not to get too caught up in that. But I would say the expectations going in, that's a little tougher to gauge from the market. What I think more than anything that the market wants to see is some cordial commentary and for a delay to any tariffs put in. That would probably speed up some orders here as people look to get in, and certainly some sort of dateline, be it a September 30th or whatever it might be, on a pushback on the tariffs, so they could work in a little bit more of a area of understanding what their costs are going to be, and that's going to be really important. If we do get this, I think that would be a positive outcome. I think if anybody's looking for a deal to come out from that, I'd be highly surprised, and I just don't think that anybody that would be looking for such action has really been following the story or has an understanding of what's going on out there. So should be interesting to watch, and definitely going to be the big event of the week. But there are a few others too. The earnings I'm going to get into with Scott here in a little bit. We'll take a peek at some of them. Fed speak. We want to see the Fed message crafted out here, and with that on Tuesday, we're going to get Fed Chair Jerome Powell speaking again, New York Fed President John Williams, St. Louis Fed President Bullard, who we already heard from today, and we have fair idea where he stands in Bostic as well. So this is going to give the Fed time just all next week to kind of handcraft that message, but I wouldn't expect them to step too far out from where they are right now ahead of the G20 meeting. They want to see how that goes on. And then, of course, U.S. economic data, going to be a key read for everybody. A little added weighting into that Fed July decision. But some of the key reports are going to be the durable orders on Wednesday, and then the personal income and spending and PC prices due out on Friday. I would also note that we are going to get the start for the Democratic presidential debate, so we get a pretty fair idea of where some of these candidates stand in terms of a counterpoint to the president's policies right now. So should be interesting. Going to be plenty of headline fodder there. Can't imagine it's going to be a positive for business or the big banks at all, but something to keep an eye out on. Taking a look through each of the segments here real quick then. We got the U.S. macro, already discussed the Fed speak there on Tuesday. Not much on Monday. Then also on Tuesday, some housing price data and the June consumer confidence number, as well as new home sales. Probably should have highlighted that June consumer confidence number. That should certainly be interesting. Wednesday, we get those May durable orders. as well as an advanced trade inventory. And we're going to get the Democratic presidential debate that night, and there's a second one on Thursday. They're splitting up the candidates because there's too many to fit on one stage. Thursday, June 27th. Third estimate of the Q1 GDP, never a big one. May pending home sales, some nat gas, and then the bank stress test capital return plans are expected that day. Friday, personal income and spending and PC prices, definitely the big one. And then a slight tweak to the Michigan sentiment number. On the international front, there are a couple of German surveys out there and CPI numbers. We got the IFO business survey on Monday and the GfK consumer survey on Wednesday in Germany, as well as CPI out on Thursday. Outside of that, Bank of Japan has their minutes, and later on in the week their summary of opinions, so that could be of interest given the weak data we've seen out from there. Italy's got a 10-year bond auction. Curious to see how that's going to go off. Speaking of which, we're going to have our bond analyst Andrew Grabowski on next week to discuss what's going on in the bond markets, and we're going to try to get him in for a little bit more of a regular piece there, just to give us some understanding of what's going on there. Hopefully touch on some of the corporate debt as well. Then Friday, this is going to be while the G20 meeting's going on, but we're going to have China manufacturing and service PMI numbers come out that Friday night, so bigger events towards the end of the week on the international. Looking at the corporate conferences, not a lot going on. That G20 meeting, obviously the big one, but there's also an OPEC meeting. I got to double check that because I did think I saw something about that getting postponed. But there's some of the items that we are looking at. Outside of that, we got a number of key earnings, and I'm going to bring Scott in here to discuss some of them. Scott, that's you.
Happy Friday, Gav.
Happy options expiration Friday, so that's always a nail biter.
Yeah, you woke me from my slumber here.
Yeah.
This is pretty. I don't even know what to say about this market today. I hate to say it was predicted, but I've seen this so many times before in quarterly expiration days. You'll probably get some action
Especially
here
in June.
Yeah, the summer doldrums where people will just headed out to start the weekend early. You might get some action here, after the 340 closing orders come in and imbalances come in. But, man, I mean, if you look at a 1-minute chart, I think there's some activity. But you take a look at the...
Yeah, I got the 1-minute chart up just to try to spice up the audio page here.
Yeah, that's completely deceiving there. If you take a look at a 30-minute or a 60-minute time frame, and you're looking at a very tight, narrow doji session here going on, so
yeah,
nothing going on.
All right, let's take a look at some of these earnings here, Scott, and we'll start off with Lennar, LEN. There are two home builders out, and we could look at them first. Lennar and KB Homes. I had a short in the XHB that I ended up getting rid of. I think some of those, the mortgage refis, were making it seem like the housing market was a little bit stronger than I think it is. But the existing home sales number today was pretty decent, so curious to see how these look. These names have been trading basically in a sideways pattern here. You got any thoughts on Lennar?
Not particularly. I try not to, identify a difference between Lennar and Pulte and what's the other ones? KBH and what's the one with the D? Can't remember the. There's a whole bunch of them out there anyway. Home builder stocks. They all seem to do the same thing. They build homes, and they all look the same. So if anything, I just go after the ETFs, the XHB and the ITB.
None of the home builders are in those.
They are. One of them are. I think.
Well, the XHB is like Home Depot's the top holding.
Yeah.
And, Lowe's is a pretty big one. So.
I was going to say that Lowe's and Home Depot definitely dominate the one of those ETFs. I can't remember which one it is. Okay, and then so it's home construction ITB that it seems to be a little bit more weighted towards some of those names. But they include home furnishing, things like Sherman-Williams paint, Mohawk carpet, furniture brands, etc. So. Yeah, I mean, but either way, it seems to all be somewhat related because they seem to somewhat trade together. But overall, I mean, this group year to date has been maintaining a lot of relative strength, and it is stalling out here along the recent April, May, June highs, but at the same time, it's not rolling over. It still has that multi-month uptrend in play here. It's been climbing back above the 200-day moving averages, back above the 50-day moving averages. And mind you, this group was super out of favor in 2018. I mean, it got hammered, almost like 40%, 50% in some cases. So it's been in a real nice recovery mode for the year to date. But it's just taking a breather up here, and I don't know, waiting for something, but it's not really bearish. So getting back to Lennar, we'll see what it can do. Ideally, you want to see it break out above recent resistance levels around 53 and maintain the support somewhere around $49 or $50.
Okay. KBH is the other one. And obviously, we're keeping an eye out on orders here. Any of their costs that's being associated with anything, that'll also be key. But KBH looking like a similar chart, maybe a little bit weaker than Lennar here, Scott. And KBH is out Wednesday.
Yeah, they all look the same here. I just ran through PHM. DH Horton was the other one I was thinking of. DR Horton, I'm sorry. But Toll Brothers, another one. Yeah, they're all the same, Gav. The resistance levels in the past couple of weeks and support levels are pretty well defined there.
Okay, let's take a look. This is one that I've had an interest in. It looks ugly, especially when compared to its peer KTOS, but AeroVironment, AV, Scott's drone play that I've talked a lot about in the past. It's been a whippy one. This chart's, I'm going to pull up the weekly to give people a better idea, because I do think it's one of those names that if they miss, could get hit pretty good. I'd be jumping in on it if that is the case, but as you can see, Scott, that weekly's not looking very healthy right here.
No, not at all. So what was the peer, KTOS?
KTOS, yeah, which has been launching straight up. Some takeover chatter around that one too.
Okay. Well, you know my theory on when I see two charts, same pretty much. They both are in the drone space. To me, somebody knows something and likes something with KTOS, and they're favoring it over Avaya, AV, or AeroVironment. I guess it is AV. Yeah, I'm going to go with the trend on this one. So,
yeah, I'm just taking a quick look. Forward PE for AV is 40 times. Forward PE for KTOS is 43 times. Price to sales for KTOS 3.85, whereas AV is 5.03. So pretty similar valuations here on that end, but yeah, obviously KTOS has been the better performer here, so keep that in mind. Next up, going to get a good read on the U.S. economy with the name that I know you've played a lot in the past, Scott, FedEx, FDX. Right back by that 150 area that I think you bought it on the day after Christmas, or maybe it was Christmas Eve. But right back at that level after a nice little bounce to the 190s that was quickly faded. Certainly concerns around the economy weakening, and for these guys in general, they have that TNT Express that we know Europe's had some pretty weak numbers, so that's led to some concern for FedEx. What do you see if this breaks down as that key area, Scott?
Yeah, in all fairness, I think I started looking at it right around the 160 break. Things are getting real hairy there, if you recall, going into the Christmas holiday. So and the whole market was accelerating, but I was definitely saying, all right, this is short-term overbought. I want to play a dead cat bounce going into the end of the year. So scaling in below 160 was the play that I had there. It worked out in favor, but going forward, I mean, it's obviously seems to be getting smacked down on the headlines that Amazon's going to be rolling out some sort of new fleet of their own services to deliver goods and whatnot. So it's taken a beating on that. Overall, you do have that potential support in play around the 150 area. Again, that was challenged just recently. But my theory on stocks that are just rolling over and starting to show multi-month underperformance below a 200-day moving average that's been sloping down, they tend to be somewhat of an avoid for me. I like the name. I see the trucks on the road. But it seems like this one's got that big Amazon cloud looming over it. So until something gets cleared up there, I don't know. You just got to nibble on it if you really like the name.
Okay.
What are your thoughts on that one?
On FTX, I'd be cautious on it. I'm expecting a weak print, but if we did get that weak print in this 155 area held up, I'd be certainly a lot more interested in it. I don't like the way the chart's setting up, and as I just said, a little concerned about some of the business here. I think it's one of those cases where UPS is looking like the better name. We've talked a lot about that. That's at least been more in a sideways consolidation pattern, I think. But I would like to see a bad report, some cautious outlooks, and then for it to hold up in this area.
Yeah, it's a tough one. I haven't traded at all in the last few months, but yeah, I'll keep it on the radar for next week for sure.
Okay, next up we got Micron. Here's a name that I'm pretty cautious on because this will be a good tell for the space, though, and perhaps some of these semiconductors are given a little bit of a reprieve ahead of the G20 meeting. But this is a stock that I'm expecting. All the commentary I've been seeing around NAND and DRAM is that it's running a little bit worse than expected, and this is really lowering expectations for Micron and their guidance outlook. Micron's another one that's in that list of companies expecting a strong second half of 2019. I'm expecting to see that can get kicked down the road, in which case then this 200 weekly moving average that you can see in the blue running right around that 3068 sets up as a pretty key level for the stock to hold. And I think it's going to be difficult for it to do that in this environment. But again, the earnings might be given a little bit of a reprieve until we get some more color around the G20 meeting. But I'd be pretty cautious on this one. I'd be on the sidelines waiting to see what happens before getting involved.
Yeah, underperforming underneath the mean 200-day, 50-day moving averages for a couple months now since last fall. And I would just kind of pay attention to that psychological $30 mark that came into play at Q4 of last year. That would be the line in the sand to watch on this one.
Yeah, okay. Next up, we're going to take a look. As I said in my comment, there's a lot of different areas we're going to get some information from. And we just highlighted the home builders, the semi-space. We'll also take a quick look at SGH, but also wanted to mention General Mills, GIS. The Staples play that's been looking really good. I'm in it from 45, been collecting that dividend in there. No intention of covering it. And as you can see, that's rallying up into its 200-day weekly moving average here. Scott, you got any thoughts on General Mills?
Yeah, nice recovery effort here the last couple months after getting slammed for about 2 years. The stock started declining back in late 2016. Did eventually start to bottom out there in Q4 of last year. I'm also in a my longer-term investment play, dividend account. So finally, moving into the money here the last couple months. It looks okay. Earnings-wise, yeah, maybe it gaps higher. But this is more of a longer-term play than a trade for me. So.
Okay. Jeffries is going to be out on Thursday morning, just mentioning that because that'll give us some insight into the investment banks. So we want to keep an eye out on the bankings. But Nike also out on Thursday, NKE. This is one, I'm curious to see this. This is one that I was looking to maybe buy some puts on just because I thought I was thinking that at some point they're going to see some weakness with their China exposure, but apparently they've moved most of their production out into Vietnam there, so I was surprised about that. And a name that I guess I'm going to keep an eye on because these retailers, the good ones, as long as they beat, have been rewarded. So perhaps Nike will be too. What do you think from a technical perspective, Scott? Pretty strong chart here.
Yeah, I mean, it was looking horrible late May and even early June there, but it made the nice bounce back over 80, the 200-day moving averages, back above the broken support level. Recently, it's been struggling with the 50-day moving averages as resistance, and here it is the last two sessions gapping back up to multi-week highs around 85. So it's on the mend for sure. I think it looks okay above $80.
All right. Brazilian semi-play. Looks like another one of those names that's just a downward trend. It's got SGH, which is Smart Global Holdings.
Yeah, I'm not going to touch this one.
Right.
What is that? Does this company even have any profits? I mean, come on.
They do, but
are you just pulling this up for comic relief purposes on a late Friday? That's slow for me, or what?
It's a name that we're going to want to watch for color around the semiconductor space.
Yeah. Okay.
All right. Next up, Friday morning, STZ Constellation Brands. It's looking a little weak here, Scott. Breaking below its 200-day moving average. It's got that CGC investment that some people are wondering how that's going to play out for them. But this is a name that I think needs to beat in order to keep holding that upward trend that's been in place since December 24. Otherwise, we could see this threatening back towards that 160 area.
Yeah, this is a real sloppy chart pattern here the last couple months or so. It's a sin stock. It's invested in alcohol and drugs now, and it is what it is. I mean, those stocks tend to always stay around. There's always a demand for that stuff. But man, picking this out and seeing how it's reacting to the whole cannabis legalization issue and whatnot, it's just a tough predictor here. Like I said, the chart's sloppy. I really can't say I have any sort of bias here at this point in time.
Okay, then a quick look at Jinko Solar name. We've been talking a lot about how that space has been looking pretty good here, and JKS definitely falls into that with a nice upward trend.
Yeah, I love it. That the TAN, the Solar's ETF, has been an outperformer year to date. Had a nice clean breakout there in early June. We are highlighting the relative strength the whole time the last couple of weeks. And CSIQ breaking out recently. The SPWR, SunPower had a strong rip over a week ago. First Solar, I think that's a name that you like, right?
Yeah,
and then
I'm
JK Solar
right now, actually.
Yeah, JK Solar, fantastic base the last couple of months, recent breakout in June, pulling back to that key support level there around $22 or so. So overall, I'd say it looks okay above the $20 psychological level, which also lines up with the 50-day moving averages. Right, Kev?
Yeah. So just doing a quick speed round on whatchamacallit, some of the feedbacks, but I was just asking Richard Bid, Sotheby's, somebody asking about that. There was a takeover chattered earlier today, a New York Post article. Stock's trading like it's already been taken over.
Yeah, I thought that happened.
Okay, it did. Okay, the person says, okay, I got it.
Yeah, I remember that news.
Yeah, so somebody asking about that. I mean, if it's me and if I was in it, I'd be banking and just moving to the sidelines here. But I don't have too much of a feel around that name.
Yeah, that's my advice. If you're in a company that announces a takeover,
take the money and run.
Don't have to take it all off the table. Obviously, if you like the merger company, the parent company, and you want to own shares of that, if that's the deal that's going through.
If it's a share, yeah.
Yeah, if it's cash, it's different, whatever it is. But but if you're going to get shares of another company, I would still say bank a little bit off the table, because there are, like, every now and then you do have M&A that's blocked. I know Rite Aid was one specifically, and Rite Aid, if you pick that up down in the single digits, and then the potential merger that came out with Walgreens, rocketed that stock back up to like $11, $10, and then they came out and blocked it eventually, and then the stock just went into a nosedive, and then it got broken up into like 3 different companies spread amongst whoever it was. And then if you didn't take anything off the table in the initial announcement, you're out of money, you're out of luck. So anyway, my point there is, it doesn't hurt to take a little bit, reward yourself for sitting through there and getting lucky, If you're sitting there, that's basically it. To reward yourself for being lucky that your stock got bought out, and then see if it actually follows through, and if you really want shares of the parent company.
Okay, and then just asking if Bed Bath & Beyond's a buy. We've been talking a lot about these names that it just seems like there's a lot of value traps out there, and this is one of them. I know some people look at cheap valuation and look at that as a buying opportunity, but sometimes there's a reason why it's cheap, and that would be the case, I think, for Bed Bath & Beyond here for me.
I would buy Bed Bath & Beyond. I'll grab my coupon for 20% off. So where's it trading 20% lower from now?
Yeah,
that's where I'll buy it.
I guess right around now.
I want to use my 20% coupons that come in the mail each week.
There you go for their shares. I'd probably have enough to get about 100 shares at a 20% discount if they honored that.
Multi-month downtrend below the 250-day moving averages for, what is it now, 3 years at least? Yeah. You're going back to 2015. I like the stores, but I don't go in them that often. And like I said, I don't know what's going on here. Classic value trap definition here. If you're looking for value names, make sure they're in uptrends. Take a look at our value focus list leaders. They're cheap stocks, and they are in already rising uptrends. So there's still value there to be had to the upside in those names. That's what you want to focus on.
Okay, and that's going to do it for us then over here, Scott. So anything to add on in parting?
No, you got big plans this weekend?
Going to the Rolling Stones tonight. So
nice. I didn't know they were still touring at their age.
Yeah, they're still kicking it. And
I wonder how this get a sound. Is that like auto-tuned now or what?
Well, luckily I'm getting them on the first night, so they should still be in good form. I wouldn't want to get them at the end of the tour. So Mick just had the new valve put in, and hopefully ready to go.
Oh, jeez. Yeah, nice. All right, cool.
All right,
I will enjoy. Myself, I think I told you, I've been binge watching Cobra Kai.
Yeah.
The old Karate Kid sequel, which is fantastic. The characters are fantastic. It's the 80s nostalgia references are hysterical, and it's just the role reversals that they put on this series is just you're cheering for the bad guy from yesteryear, and you kind of hate Danny LaRusso, because he became like a spoiled rich brat. So it's such an awesome role reversal. It's a well done series. It's a total joke. Don't take it seriously, but it's hysterical.
Yeah. So nice, good stuff. All right, well, we'll keep an eye out for that then.
Not kid friendly, by the way. Not kid friendly.
Okay.
It's definitely more mature adult. Yeah.
Okay, good stuff. All right, Scott. Well, we're going to be shutting down audio then here, and we'll be in touch with people, but and we'll be posting this recording too shortly.
Cool. All right, have a good one, guys.
All right, take care.